Dhavalji, please start.
Yes. Good evening, everyone. I'm C. Dhaval Mani, moderator of this webinar. We are delighted to welcome you all in the webinar being organized by the Continuing Professional Education Committee of ICI. It is my pleasure to be moderator of the webinar on financial statements format and financial statement formats for non-corporate entities in UAE and India. Cross-border tax trends. In a short while, we will start this webinar. First, I would like to praise about the CPE committee. In today's ever-changing professional scenarios, upgrading professional scenarios worldwide, the biggest challenge the professionals face is how to stay on the top of their game while while updating the new requirements and norms. Therefore, it is imperative to up to date with it is imperative to up to date to offer unique guidance and influence others with the expertise and knowledge. It is also vital to stretch old ideas beyond the traditional boundaries to create a new perspectives. In this context, the Continuing Professional Education Committee facilitates us, the professional, to maintain, improve, and broaden their knowledge, skill, and perspective and expertise required in the professional activities through webinars and seminars. The program for this evening is as follows. We have two seminars. We have two sessions, one for each hour, and topics are the formats of financial statements of non-corporate entities, cross-border tax trends, and UAE corporate tax and CA. Corporate tax and CA in India. I would like to introduce our chairman of the committee of CPE, C. Purushottam Khandelwal. Sir is chairman of the CPE and vice chairman of the members in entrepreneurs and public service and convener of the RBI Directorate of ICI. He is having 25 years of post-qualification experience in the field of audit, direct and indirect tax, and intellectual property rights. This year, he is devoted to fortifying the CP framework and guaranteeing the quality across its entire operational spectrum. This year, the major focus would be on the upgrading the CPE portal for enhancement of the branding and professional competence of the members. With this brief introduction, I would like to invite our chairman, C. Purushottam Khandelwal, sir.
Thank you. Good afternoon, a respected faculty for the first technical session, Indrajit Brahma, and second faculty, Satiji, moderator of the seminar, Dhaval Limbani ji, secretary of CPE committee, Ajitna Tiwari ji, and respected members. It means immense pleasure to be among you, the CPE committee, which is the mother of all committee. And this year, I'm extremely happy to share with you that this committee has done a lot of program for the member at large. We have organized number of national conferences, seminar, one-day seminar, workshop across the country. This year, as the rightly said, the Dhaval Bhai, that we are bringing with the new portals of the CPE, where your attendance will be marked by the your location in the auditoriums. So you have not need to go and sign. You will get OTP and your attendance will be marked. We are also this year, there is a no 3-year CPE period is there. So you have to complete CPE in this calendar year only, and we have not extended this date. Hope that you have already completed the CPE. But I'm extremely happy that the secretary of the CPE committee, Ajitna Tiwari ji, had inform you every month and the end of the month that how much CPE you have completed, how much CPE is pending. So you are aware that your CPE program, you have completed your CPEs or not CPE. Although recently we have come out with the exposure draft, for the consequential effect of non-attendance of CPA programs, and which is very, very important. We got a lot of feedbacks from the members, and we are analyzing the feedback and put before you. But it is sure that you have to attend the CPA program, because what we are selling our services, and it is must that we have to update in our knowledge. The first technical session is taken by Indrajit, madam. That is the important, that the what is the financial is format of the financial state for non-corporate SSE, because you all know the schedule 3 of the companies act for the corporate SSE, but no, your much member is not much aware about this format of audit for the non-corporate SSE. So you will be certainly benefit. The second session will be the tax treaty between various country and the cross-border transaction, which is taken by the Satish Datroji. Best of luck to the success of this program. Thank you so much.
Thank you, sir. Thank you for your updation and your welcome address and setting up the theme for the event. Now I would like to introduce our today's first faculty, C. Indrajit Kaur Bumrah. She is an expertise in the financial reporting and analysis of the analysis across diverse industries, including pharma, real estate, and IT. She is in a diverse. She has delivered various lectures on IND-AS 117 and formats of the financial statements of non-corporate entities and LLPs on multiple platforms. With this brief introduction, I would like to hand over the mic to our today's faculty, Ms. C. Indrajit Kaur Bumrah.
Thank you, C.A. Dawal ji, for the gracious introduction. And many thanks and gratitude to C.A. Purushottam Lal Khandelwal ji, Chairman of Continuing Professional Education Committee, and our Vice Chairman, C.A. Gyanchandra Mishra ji, and the CPA Committee for giving me the opportunity to deliberate on guidance note on formats of financial statement of non-corporates. And a very good afternoon to all the participants and my fellow speaker. So welcome you all. And firstly, I would like to share my presentation, sir. So let me know, is it visible or not? Dhavalji, is it visible?
Yes, ma'am. It is visible, ma'am.
Thank you so much. So a very good afternoon to all of you. So our today's topic is guidance note on formats of financial statements of non-corporates. As we all know that Institute of Chartered Accountants of India, through its accounting standard board, has formulated and issued accounting standards for preparation of which is assisting or helping in preparation of financial statements of corporates, companies, or even non-corporates. These accounting standards prescribes how to recognize, how to measure, how to present, and how to disclose the events or the transactions which are of financial nature, and the various elements of financial statements like assets, liabilities, equity. But however, for the non-corporates, all we have the accounting standard, the measurement principles, presentation disclosure requirements, all said and done, but they have been done in the absence of standardized formats of financial statements for non-corporates. And these practice have been done over the years, and it has been continued over the years. They are using different, every non-corporate, they are using different formats of presentation. So when we have different types of formats for the presentation for preparation of balance sheets, so they are not comparable, and so that there was a need to formulate these standardized formats of financial statements for these non-corporate entities. And Accounting Standard Board of ICI taken this initiative and they come up with a guidance note which prescribes the formats for preparation of financial statements for the non-corporate entities. So, what this guidance note will do, as the word guidance note itself says, that this note will be guiding the preparers, the auditors, the chartered accountants, the one who is preparing the financial statement. They will guide them how to present the true financial performance. What is the financial performance? I mean, profitability or loss, whatever the company is earning during a particular period, and a financial position, which is represented by the assets and liabilities of the entity. So this guidance note will guide them how to present these true financial performance and financial position in a uniform, in a standardized format. For what? For enhancing the comparability of the financial statement. And this faucet guidance note already been issued by the Accounting Standard Board during the month of August 2023. So uh, today on this platform, we will be enlightening uh, through this guidance note on the scope of this guidance note, applicability criteria, the components of these guidance notes, and the some general instructions which this guidance note is providing for the preparation of financial statements and when it will become effective. And laterly, we will touch upon the formats of financial statements which ASB, Accounting Standard Board, has provided in Excel format, which is available on their website. So moving forward, when we think about the our economy, imagine our economy as an economic landscape. Our economic landscape as a complex puzzle, and the financial reporting system, the system which is preparing, which is assisting in reporting the developing rules, regulations, practices for reporting the financial information as the glue holding all the puzzle pieces. And as we know that any system, whether it is a financial reporting system or any other system, the system is developed by some governance, some rules, some standards, and some framework. Likewise, the reporting, the financial reporting system is also fortified by a robust governance, highly quality standards, and a firm regulatory framework, which makes this financial reporting system as the cornerstone of economic development. And when we talk about these high quality standards, as per the definition in the literature, what are standards? Standards are rules, practices which were followed by the past, the conclusions coming up, the standards, rules, standards, practices. But these high quality standards are not just a set of rules and numbers, but according to a system, these rules or these practices are the bedrock on which the trust is building. When we talk about the trust, why a business entity needs to build trust, the question arises there. Why any business entity needs to build trust? Their work is to earn profit, do business, they are engaged in their multiple activities, but why any business entity needs to build trust, and who is concerned about the trust? So the users, during when we enter in this commerce background, so in the initial years, we study about the accounting. From the initial years, we study about the accounting system, and why we are doing the accounting, why we are preparing these all informations, why are reporting our profits, assets, and liabilities, because there are someone who need this information. Those are the users of this financial information. And we have two types of users. external and internal users. So, namely investors, lenders like bank, financial institutions, government regulators. They are some of the users who really rely on the information which is presented in these financial reports. For example, you can think yourself when you are thinking of investing in someone business, in some asset or some business. So you are also the user. So you need some information when you are investing financially. So you need that financial information about the business. So who provide this information? The financial reporting system. And second example can be of the financial institution like bank. When bank is lending money to any business, they also require assurance that no one can give their money to anyone. They also check the background and the capability of that entity or person to pay off, that whether he or that entity will be able to pay back the installment, pay back the money back or not. So these banks also require assurance that how much there is certainty that they will pay the loan, and how they will get these information through the financial information like financial statements, financial reporting reports. So what financial information they will get? How much liability already owed by the business, which is available in the liability side, and how promptly business is paying the interest for the previous loans, whether there is any deferment in the payment of interest, and what is and what was the past performance of the entity, which clearly shows the capability of their paying or incurring expenses. So these financial information which is making available through this financial reporting system. So on this information, these users rely, which are presented in these financial reports. So moving forward, from there, we are connecting dot by dot. We have started with this guidance note and what is this guidance note is providing standards, then financial reporting. Now we got the word financial reports, the financial reporting. So normally, what is this financial reporting? We are reporting the financial information about the entity or the business. So whenever anyone thinks about the any kind of information, so a good information is which is very crystal clear. When you are reading or getting that information, it should not leave any room for confusion. And when we talk about the financial information, the quality characteristics of the financial information it should be transparent, it should be complete, it should be impartial. And this transparency, this completeness, and this impartiality, they are not just fancy words. They are the pillars that actually uphold the credibility of the financial information provided by the business entity in the financial statements. Now, when we think about the financial reporting, so everything is done on some base. So, what is the base on which this reporting is done? So again, we thought about the base. So whatever we are doing, they have some standards, some rules, which actually is the base for this financial reporting system, which is the high quality standards, which is known as accounting standard, which has ICI provided the financial reporting system. And you can picture these accounting standards as the standardized language of business. These standards are these accounting standards are set of principles that entity needs to follow, and they have to adhere to while they are crafting their financial statements. And Again, these principles need to be transparent, consistent, comparable, and reliable. And when we talk about the accounting standards, why we have these accounting standards and what they are doing, what the role they are playing in preparation of financial system or financial statements, and what role they are playing in this financial reporting system. These accounting standards, these rules, practices, they are transforming our one entity's financial statements into a universal dialogue. As we all know that accounting standards, these are applicable all over India, these one accounting standards. And for example, any entity who is doing business in Delhi, Noida, UP. So in any investor from Nagpur want to invest in that entity. So we have standardized rules and regulations for preparation of financial statement. Whether you are in Nagpur, you are in Noida, you are in Delhi, you can easily understand these financial statement because the base for the preparation of these financial statements are same. And when we in starting, we talk about the economic landscape. So our economic landscape is comprises of various entities, which includes corporate entities, non-corporate entities. So when we talk about the corporate world, what is the corporate entities, which is also known as companies, which are companies who are registered under the Companies Act. And for these corporate entities, financial information is also crucial for the users. And who are the users for these corporate entities? They're shareholders, regulators like tax authorities, registrars, SEBI, tribunal, and they also have big investors. They also need funds, which banks, their lenders, the financial institutions provide them, and other stakeholders like creditors, suppliers. And we all knew that for the companies who are registered under the Companies Act, they have a law, that is Companies Act 2013. And the Companies Act 2013 clearly provide or specified through the Schedule 3 the standardized formats for the financial statements of companies, so that they can meet the diverse needs of these users. So in our economic landscape, we talk about the corporate world. And what about the entities which are other than the corporate entities? So we name them as non-corporate entities. So who are these non-corporate entities? So companies, the corporate entities were those companies who are registered under the Companies Act, and the non-corporate entities are those entities which are not registered under the Companies Act and LLP Act. So can anyone tell me, do these non-corporate entities who are non-corporate entities, these do they have any standardized formats for the preparation of financial statements? The answer was no, but important thing was that the Institute of Chartered Accountants has earlierly stated in their announcements, which have been issued by the council from time to time, that accounting standards are applicable to these non-corporate entities. And the same announcements you can read in the compendium of accounting standards, right from 1984 to 85 to 1991. And these accounting standards are applicable to these non-corporate entities. and in June 2022, you can check on the website of Accounting Standard Board. In June 2022, the Accounting Standard Board of ICI has issued the technical guide on financial statements of non-corporate entities to deal with the applicability of accounting standard for these non-corporate entities, in which they have recommended the formats for financial statements for the non-corporate entities. So uh, through these technical guide, or through which was available from the 7th sorry June 2022, uh, these non-corporate entities already had a technical guide, and Accounting Standard Board on 7th February 2023 has prescribed the formats for the presentation of financial statements of non-corporate entities by issuing a guidance note, which were earlier issued as the part of the technical guide, which was available since June 2022. And recently, they have gone a step further. They prescribe the formats for financial statements in this guidance note. And the goal is simple. The goal of accounting standards for issuing this guidance note is very simple. They want to standardize formats, they want to enhance the quality, and they want to make these financial reporting more comprehensive. Now, when we talk about the effective date of this applicability of this guidance note, it is applicable. The effective date of these guidance note is financial accounting period beginning or after the 1st April 2024. That is 1st April 2024. From the 1st April 2024, this guidance note will be applicable on the non-corporate entities. And thereafter, whatever accounts are required to be prepared by the non-corporate entities, they should be prepared in accordance with the guidance, the recommendations which are available in this guidance note. So, but the question arises whether for the financial year 23-24, this guidance note is not effective. Rightly, for financial year 2023-24, this guidance note is not effective, but guidance note does not say that whether it can be followed earlier as such. If any entity wants to improve their financial statements, so definitely they can voluntarily follow this guidance note. And as far as the status is concerned, the guidance note for the announcements which has been issued by the councils, these guidance notes are recommendatory in nature. So even after 1st April 2024, the status of these guidance note will be recommendatory unless some law prescribes it in a particular mandatory manner. But the objective, when we talk about the why these accountings, these standard formats have been framed by the accounting standard boards. Again, the primary objective of these guidance note is to standardize the formats. So the users can compare the different types of non-corporate entities. And the second objective, if we talk about the objective of the guidance note, first is to standardize the formats so that we can compare the different types of entities. And the second objective of these entities is to enhance the quality and comprehensive of the financial reporting by these entities. So let's take an example. As I said earlier, that the bankers at the time when they are giving the loans, and regulators like tax authorities. So if you think yourself as a user, as an investor, or as a banker or tax authorities, if the formats are standardized, then the users of financial statements, they will get a uniform, a same type of information which they can use uh, very easily, and for the objective they are concerned. Like when bankers are giving loan, if they find when they are not having standardized formats, so the any corporate entities financial statements might contain some items which are missing, which are not available in financials, that non-corporate entity financial statements. Then what they have to do, they have to go back to the non-corporate entity for the relevant information. But when they have the standardized formats, so now they can, what they can do, they will have all the necessary information which would be required by most of the users. So uh, we can say that the lenders and the other users, they will have standardized type of financial information which will truly facilitate their work also. Okay. So we have gone through the need of guidance note, the objective of guidance note, the history of guidance note. We were already have the technical guide since June 2022, and the Accounting Standard Board come up with this guidance note on 7th August. In August 2023, who has already released these guidance note for the preparation of non-corporate entities, and it is now effective from the 1st April 2024. So we talk about we have introduced the guidance note, but when we talk about the non-corporate entities, so do we know that what exactly are non-corporate entities? I have discussed the definition of non-corporate entities. Those entities which are not companies, means which are not registered under the Companies Act or LLP Act. So those entities are non-corporates. But companies and LLPs, beyond, we have different kinds of uh, entities or business or professional entities. So who falls under the umbrella of non-corporate entities? The next question is, what is the scope of this guidance note for non-corporate entities? So as you all can see the scope, it's a big family. The non-corporate entities is a big family, from the sole proprietorship firms to partnership firms, whether it is registered or unregistered. HUF, Hindu Undivided Family Business, Association of Persons, societies, trust, these statutory corporations. For the statutory corporations, if these statutory corporations, these entities are engaged in any business or professional activities, so then any of the firm, partnership, association of persons, societies, statutory corporations, if they are engaged in any business or professional activities, then you are a part of this non-corporate entities clubs. You are covered under the scope of this guidance note for the formats of financial statements for non-corporate entities. So do we have any exceptions to this guidance note? Yes, companies which are registered under the Companies Act, LLPs which are registered under the LLP Act. But apart from these two exceptions, those non-corporate entities, those societies, those trust, those business, for them already there are a different law act, they already prescribe some formats. For example, Maharashtra Public Trust Rules 1951. For these trusts, they already have prescribed the formats. So they are exempt from the scope of the guidance note. Or any for any education institution, political parties, or non-profit organizations, ICI already specifies some guidance. So they are also the exception of these guidance. So in the brief, we can say this guidance note is covered the non-corporate entities, but there are some exceptions also. And what ASB has done through these guidance note, they just try to create a standardized language for financial statement that everyone can understand. So and non-corporate entities, I earlier stated it's a big family, and we have n numbers of corporate entities, small, large ones. Whether all the non-corporate entities covered under the scope of these guidance notes. I remember one of my colleague called me and asked me that you are practicing and speaking of this guidance note for non-corporate entities. So every non-corporate entity, whether a entity who is doing business and generating 1 lakh rupees profit, or every non-corporate entities has to follow these standardized formats. So I just said no, because ICI, Institute of Chartered Accountants, outlined the criteria. There is some criteria for classifying these non-company entities, the non-corporate entities. And again, as she shared her question, the purpose of this classification is similar, that smaller entities, they don't want to put them into discomfort because of these onerous requirements if anything is contained in this accounting standard. So what Institute of Chartered Accountants of India has done, they had made the classification criteria for the non-corporate entities for the applicability of scope of this guidance note, which is basically based on the size of the entities, and also whether irrespective whether entities are listed or not listed. So they have categorized, if you can see the screen, the classification of non-corporate entities, criteria for the classification of non-corporate entities. They have categorized these entities in different levels. We have 4 levels, and each with specific criteria. And mainly these 4 levels are classified and compared on the basis of turnover and borrowings. And they for the level 1, we have 2 other criteria also, that if the any entity is listed or in the process of listed, they are covering under the level 1. And any uh, bank, any financial institution, any entity which is carrying on insurance business, they are also covered in the level 1. So when we talk about the criteria based on the turnovers and borrowings, so you can see the numbers. The turnovers and borrowings will be measured in crores. So those entities who is having turnover in crores, borrowings in crores, they will come under the scope of this guidance note. So when we talk about this turnover, starting from the smaller number, 10 crores, entities who are having turnover equal to or less than 10 crores. They will cover under the level 4. And when we move beyond 10 crores, exceeding 10 crores, but equal to or less than 50 crores, we are in level 2, level 3, sorry. And above 50 and not exceeding 250 crores, we are upgraded to level 2. And as we have discussed, level 1 is the largest entity. So these entities, whose entities having turnover exceeding 250 crores will be covered under level 1. And for the calculation of turnover, these turnovers will be excluding other income. And what is turnover other income? You can refer in the literature in the guidance note available in the annexures. And on the basis of turnover, starting from 10 to 250 crores, you can categorize your entity in the level 1, level 2, level 3, level 4. The next criteria to classify the levels of or the scope of these non-corporate entities is borrowings. So for the borrowings, we have numbers 2, 10, 50. So when any entity has borrowings equal to or less than 250 crores, they will be covered in level 4. Entities having more than 2 crores but less than equal to 10 crores, they are covering in level 3. And more than 10 crores but less than or equal to 50 crores, they will be covering in level 2. And more than 50 crores is level 1. So those entities who have turnover under this umbrella from 10 crores to 50 crores, and borrowings or and not or borrowings from 2 crores to 50, more than 50 crores, they will be covered under the umbrella of the scope of this guidance. And for the why these levels have been created, because on the basis of these levels, the applicability of accounting standard is also stated by the ICI. So moving the applicability, non-applicability, or the applicability of accounting standards with any exemptions, we will firstly understand these accounting standards, which are the rules on which these formats will be prepared. So when do these accounting standards apply to an entity? The literature have specifically declared that any entity which is engaged in commercial, industrial, or business activities, on these entities the accounting standards may apply. So is there any possibility of exclusion? Yes. If no part of entity activity is commercial, industrial, or business in nature, they are excluded from the applicability of accounting standards. Even a small portion of such activities triggers the application of accounting standards to the entire spectrum of entities operations. And currently, we have 3 sets of accounting standards in use. First one, Indian Accounting Standards, which the short name is IND AS, which is applicable for specified class of companies, and these are notified by Ministry of Corporate Affairs. Second set is Accounting Standards AS, which has been issued under the Companies Accounting Standard Rules 2021 for companies which are not following IND AS. And these accounting standards, which has been issued through rules 2021, these are also notified by the Ministry of Corporate Affairs. And the third set, accounting standards, which are issued by the ICI for entities other than companies. So the first two are talking about the companies, and the third one is going to emphasize on the entities other than the companies. So these accounting standards, which for the non-corporate, the entities other than companies, are issued by ICI. So we are going to emphasize on these accounting standards, which is also covered in these guidance notes for the non-corporate entities. So we can take a brief about the Ind AS for companies or accounting standards for these non-corporate entities. We all know that Ind AS is applicable to listed companies, NBFCs, and unlisted companies or unlisted NBFCs having net worth of 250 crores or more, and also they're holding subsidiary joint ventures. And for the companies who are not covered under Ind AS, they have rules 2021 accounting standards. But our today's star, that non-corporate company entities or non-corporate entities. So for non-corporate entities, which one need to understand while making financial statements of non-corporate using the guidance note. So ICI has prescribed accounting standards for non-corporate entities, and they have classified all accounting standards in level 1, level 2, level 3, and level 4. And there are some relaxations for micro, small, and medium size entities under level 2, level 3, and level 4. They have received some exemptions or relaxations from some AS. And the accounting standards, there are some preface to the statement of accounting standards which outline the principles for compliance. So when we talk about the applicability and exemptions, so how many accounting standards are applicable for entities? There are 27 accounting standards which are effectively applicable. So for level 1, all 27 accounting standards are applicable. So for level 2, level 3, and level 4, we have some relaxations. When we talk about the full applicability, there are 16 AS which are fully applicable for the level 2, 12 AS which are fully applicable for the level 3. There are 8 accounting standards which are fully applicable for the level 4. And not applicable, they have got this huge relaxation for some standards which are not at all applicable for the level 2, level 3, and level 4. So level 2 have 7 accounting standards which are not at all applicable. Level 3 has 9. Level 4 has 11. And some accounting standards which are partially applicable. So only when we talk about the AS22, so level 4 is having the relaxation or exemption for the partial applicability. And when we talk about the AS15, so level 2, level 3, level 4, they all got the exemption partially from the partially applicability of the accounting standards. And last not but the least, we have applicability of accounting standard, but they are exempted from the disclosure requirements. So level 2 have 3 accounting standards, level 3 have 5, and level 4 has 6. So we can just get the overview which standards are applicable, which are standards are name of the standard which are not at all applicable, which are applicable with disclosure requirements, or which are applicable partially, that in this AS15 and AS22. So we will talk about the not applicability. So AS3, that for the cash flow statement. So these are not mandatorily applicable for level 2, level 3, or level 4 entities. And when we talk about the when we talk about the AS14, So this AS14 is not applicable for the level 4 entities. And AS17 is also not applicable to level 2, level 3, level 4, and AS20, 21, 23, 24, 25, 27. These are the accounting standard which are not mandatorily applicable for level 2, level 3, level 4. And for level 4, we have one more accounting standard which is not mandatorily applicable, AS28. And those accounting standard which are applicable but disclosures are requirements are exempted. So we have for level 2 and level 3 and level 4 accounting standard 10, 11, they are applicable but they are exempted from the disclosure requirements. And for AS13, level 4 is applicable with disclosure requirements, and 15 is applicable with disclosure requirements. And again, the 19 and 28, 29. 19 is applicable with disclosure exemption for all 3, 2, 3, 4 entities, and 28 is for 2 and 3, and 29 is applicable with disclosure requirements for the 3 of the entities, level 2, level 3, and level 4. And for the accounting standard 22, level 4 entities are applicable only for current tax related provisions. So this was the detailed overview of the applicability or non-applicability or partial applicability of the accounting disclosure requirements of the 27 accounting standards according to the classification criteria of level 2 entities, level 3 entities, and level 4 entities. So let's check how much we got to know about the classification criteria of the for the non-corporate entities, and the applicability, non-applicability, or with partial applicability of the these non-corporate entities according to the levels. So my first question is, my first client is Ramlal and Sons, which is a partnership firm. So tell me, is it covered under the scope of guidance note? Partnership firm is a non-corporate entity, whether it is registered or not registered, but to be covered in the scope of the guidance note, we have to check the criteria for classification, that turnover and that borrowings. So we don't have any information, so we cannot say that whether it is applicable or not. And our second client is Ramlal India Private Limited. So specifically provided it is registered under Companies Act. So for we know that the Companies Act are out of the scope of the guidance note. So we will not see whether how much turnover that company is having. So it is not covered in the scope of this guidance note. And we know for the companies but less than 250 crores net worth, so for them accounting standards according to the rules 2021 will be followed. Third client is again Shamlal India Private Limited, but these are not registered under Companies Act, and their turnover is 270 crores. So just tell me, we have the answer here. Level 1, any turnover exceeding, any entity was not registered under the Companies Act, also non-corporate entities, and turnover exceeding 250 crores is covered under level 1, and all 27 accounting standards are applicable on level 1. Next one is Sohanlal and Mohanlal HUF. So HUF is also a non-corporate entity, and we have the other information. Turnover is equals to 205 crores. So not exceeding 250 crores. So this is the level 2. And for level 2, we have 16 fully applicable standards, 7 not applicable, and AS 15 is not applicable. And there are 3 standards which are applicable with disclosure exemptions. Next, Mohanlal Trust, they have turnover 45 crores. So they are covering under level 4. So for level 3, sorry. So for level 3, 12 fully applicable accounting standards, 9 not applicable, AS 22 not applicable, AS 15 not applicable, and 3 accounting standard with disclosure exemptions. Then again, the Rohan Lal Bank Limited. So when we have any entity which is a bank, so we not need to see the turnover, borrowings, the net worth, anything. So they are covered under the level 1. So all 27 AS are applicable. And Lakshman Insurance Company Limited, any entity which is covering under the insurance, which is doing insurance business, they are also covered in level 1. So all 27 AS are applicable on the level 1. So I hope you all get the better understanding of the criteria for the classification of known corporate entities and what accounting standards are applicable on the different levels, level 1, level 2, level 3, and level 4, with the help of these clients, with the help of this quiz. So till now we have understood the need of this guidance note, the scope of this guidance note, the non-corporate entities who are non-corporate entities who are not all covered under this guidance note, and the AS applicability on this guidance note. Now the turn is of the highlight, the main part for this, for which the guidance note has been provided. The components of this guidance note, which are financial statements. So what are these financial statements? So basically these statements are just documents which reveals the financial health and the story of the business for a particular period. And again a question arises, whether a financial statement, what exactly are financial statements? Is the balance sheet alone is a financial statement, or balance sheet and statement of P&L is a financial statement? So the literature specified and it that the complete set of balance sheet, statement of P&L, cash flow statement, and additional notes and explanatory materials, they all combinedly made a complete set. They This complete set of these 4 items are financial statements, and this set is very crucial for understanding how a business is performing financially. And the main goal to provide the information, main goal of the financial statement is to provide the information about the financial position, which is depicted by the balance sheet, performance, which statement of P&L and law specifies, and the outflow and inflow of cash flows, which stated in the cash flow statements. So this is like a financial snapshot that help users like investors, creditors, suppliers, lenders to make their informed decisions. And for the preparation of financial statements, ICA provide the framework. Likewise, for non-corporate entities, they have provide the guidance note for the preparation of financial statement of non-corporate entities. So first, the components of the format of financial statements of non-corporate entities. So what they have four components: the balance sheet, statement of P&L, cash flow statement, and notes. So moving to the first component of financial statement, that is balance sheet. So what this component reveals, it reveals about the financial position of the entity, which comprises of the which have elements, assets, liabilities, and equity. And when we are understanding about companies position, entities position, financial position, it will involve looking at its economic resources, the funds, from where the entity is getting funds to do the business, the liquidity, how much solvent they are. So the financial position comprises of all these elements, and this kind of information help an entity to meet its financial commitments, make future profits, and distribute the cash flows according to the requirements. And second, about the what on what things the balance sheet focus on. So the balance sheet zooms on three key elements: that assets, liabilities, and equities. So so these three are the building blocks that going to tell users about the where the company is standing financially. So when we talk about the first element, that is asset. So what are the assets? These are the resources which is controlled by the entity, and these resources have been arised due to past events, and these are expected to bring future economic benefits. For example, if I'm a manufacturer and I have purchased a machinery in January, uh, to produce pens, to manufacture pens, so that machinery is a resource which I am controlling, and I have purchased in January. Now uh, for example, this I am standing in April. So in April I am just manufacturing these pens with the help of the machinery, and this machinery is expected to bring future economic benefits. So and next component is liabilities. Liabilities are the present obligations which are arising from the past events, and we are settling them, and when we are settling them, there will be outflow of resources. And the third one is the leftover interest in the company's assets after deducting all liabilities. That belongs to the owners or shareholders. That is equity. If we talk about the second component, that is the statement of profit and loss. These statement of profit and loss, they reveals about the performance of the business entities. It's all about the profitability, how companies incurring the incomes, incurring the expenses, and what income and revenue they are generating. So they are the staff performer in the world of financial statements. And we have different other names for the statement, like income statement and the profit loss account. And the main focus of this statement on the money matters, especially companies' income, companies' expenses, particular time frame. So these profits and loss, the performance, whether companies incurring profit, earning profits, or incurring losses, it reveals through the statement of profit and loss. And what exactly is it? Income and expenses. So income is the money flowing in the company, that could be through sales, services, or any other sources that boost the assets and reduces the liabilities. And expenses are the cost that are the outflows that decrease the equity. The third one is the cash flow statements. So we can say that cash flow statements are the GPS for a business cash outflow. They just tell, they give the information about the cash flows. So where the company's cash is flowing, coming or outgoing, where company is investing, where company is getting the funds, what are the cash flows for the operating activities during a specific period. So this information is giving an understanding of company's ability to generate, utilize cash flows. So and so the main components of these guidance note, balance sheet, profit loss statement, and the cash flow statement. But the last, not the least, we can't forget about the one second. Those notes and other statement and explanatory material. So which are actually the behind the scene information, none other than notes and supplementary schedules. So these notes are the actual behind the scene information. They provide extra details about the items in the financial statements. And these notes include the information which actually reveals the risk, uncertainties, and additional details, which is not directly visible on the face of the balance sheet or profit loss statement or cash flows. So this was all about the components of financial statements, formats of financial statements for non-corporate entities. So moving further, we have some general instructions from the for the preparation of financial statements and statement of profit and loss for a non-corporate entities. First is if we say about the what is the purpose of financial statement, it should be, there should be clarity, and there should be compliance with all the accounting standards and the relevant statutes. And if any rules demand change or any disclosure, they should comply with that also. Second instruction that has been given about that the guidance note acknowledge that different account non-corporate entities might need different language, like for the words, like for association of person might use member funds instead of owner funds. So that reveals the same meaning, but they have different vocabulary, so they can use that. And they have to give the extra insights in the notes. They have to follow the same unit of measurement what they have used in the starting. And the financial statements should be like that. It should be comparable, and minimal disclosure requirements should be adhered to. Last but not the least, there is a general instruction for the rounding of the numbers. So how we need to rounding of the numbers in the financial statements, it totally depends on the total income of the non-corporate entities. Like for less than 100 crore rupees, so we have to round off it to the nearest 100,000 lakhs or millions or decimals thereof. And for 100 crores or more, to nearest lakhs, millions, crores, or decimal thereof. So this all was about the guidance note on financial statements for the formats of financial statements for the non-corporate entities, where we have today covered about the existence of the formats of financial statements for non-corporate entities, which ASB has initiated, make an initiative through this guidance note, their applicability, their effective date, and what is the scope of this guidance note, who are the non-corporate entities, and what is the criteria for the classification of for these non-corporate entities, and the elements of the components of the financial statements for the for non-corporate entities, and some general instructions which this guidance note have provided. And you all can read the literature given in the resources slide, which is available on the Accounting Standard Board website, ICA website, with the name guidance note on formats of financial formats of for non-corporate entities. And they have also provided us the excel formats for the financial statements, which includes detailed, I can show that, which includes detailed balance sheet in excel formats, statement of P&L, so and with the notes, like for the owner funds, for the reserves, for loan payables, for the liabilities, for each item of the balance sheet and P&L, they have provided the notes, and it is very much available for everyone on the Accounting Standard Board website. So thank you so much.
Thank you, madam. Ma'am, we have one question from our participants. The question is, which accounting standards will be applicable to partnership firm level 2 SPAS in which ABC Limited, a listed company, holds 70% stake? Ma'am, you are mute.
Sorry. So the question is whether the partnership firm who is having interest, substantial interest of, can you please repeat the question?
The question is, which accounting standards will be applicable to a partnership firm level 2 SPAS in which ABC Limited, a listed company, holds 70% stake?
70% stake. So
Yeah.
the one additional information which is provided in the classification criteria of non-corporate entities for the applicability of accounting standards. So there the entity who is covering in the level 2, so
Yeah.
they're holding their subsidiaries or are also covered under the level 2. So it is much applicable to that entities in which they have 70% stake.
Okay. Thank you, ma'am. Thank you for enlightening us on financial statements for non-corporate entities and its applicability and its disclosure requirements. Thank you very much, ma'am.
Thank you, sir, and thank you, everyone.
Yeah. Then we will straightly start with our second faculties. Our second faculty is CA Satish Dhotre. He has an experience over 12 years in the areas of domestic and international taxation, statutory laws, and corporate governance. He has driven success through meticulous approach to compliance, auditing, and strategic business planning, leaving a mark of excellence in industries such as general engineering, chemicals, pharmacy, and many more. With this brief introduction, I'll hand over to our today's faculty, CA Satish Dhotre. Sir, Now up to you, sir.
Thank you, Dhavalji, for giving such a nice introduction. I hope I'm audible to everyone.
Yeah, you are audible, sir.
Special thanks to ICI, Continuing Professional Education Committee, for organizing and giving this platform for me to represent the tax trends to our professional colleagues. My special thanks to Khandelwal sir, Mishra sir, and Aditya ji for allowing this platform. Yeah. Okay. Yeah, I'm view slideshow. Okay. Yeah. I think presenter view. Yeah. Your slideshow is this? Is this fine?
Yeah, this is perfect.
Yeah. Thank you. Yeah. Okay. So, coming to the our current topic of today, cross-border tax trends. What is globally happening in the taxation area? Uh, Specifically, our neighboring country UAE. What are the corporate tax trends in UAE, and what are the challenges that have been faced by CA India uh, while using this territory of capturing the recent trends of corporate tax? Uh, so we divide this webinar into my four topics of discussions according to this cross-border trends, corporate tax opportunities in UAE, challenges by CA India. We will explore the key aspects of corporate taxation worldwide, along with a specific focus on the UAE. And what are the challenges that today many of the CAs are facing, that coming the new ventures from India to explore these opportunities of corporate taxation in the UAE. When I come into the global corporate tax, the global corporate tax, just my internet is a little weak. I'm stopping my video and I'm going to the slide again. Okay. The global corporate tax rates until now, UAE was a tax haven country, which is not having a corporate tax at least. Though VAT has been introduced fast in 2018, but the corporate tax was not there. To my mind, very few countries are there where there are no corporate tax, such as Bahrain, and I think Bahrain is also in the process of implementing taxation, but carry Iceland and all 3, 4, 5 countries, barring these countries, every country is now catching the bus of uh, taxation. So if we see, uh, many of the countries worldwide, according to OECD guidelines, are specifically attaching to the tax rate of 30%, 20%, though very few countries are single-digit tax rates, and UAE among this one signing BPS to those are introducing global corporate tax into the UAE. These are the rates which we see. Few countries like KY, BM, like Bermuda, Bahrain, are having the zero tax rates. So presently, every country is now switching to the taxation system for as a signing country of the BPS, or the development of the countries. Countries with zero tax rate, as I said in the previous slide, only few countries like Bermuda, Bahamas, Cayman, Iceland, Kuwait, Brunei. These are the countries where the corporate tax is not there, no taxation is there rather. Though delayed, but now UAE has catched the bus, and corporate tax been introduced in June 2023, though the rate of taxation is a single-digit tax rate, but that has exploded many opportunities into the UAE now for the tax professionals concerned. The strategic location of the UAE is, it's a big advantage for the professionals for catching the market. If you see the market survey, if you stand in the middle of famous Meena Bazaar in Dubai, and it is not hard to imagine, you are 1,200 miles away from Arabian Sea of Mumbai. Meena Bazar is a location in the UAE where many of the Indians you will find. If you go, you will find the names like Biryani Wala and Company, Mini Punjab Restaurant, Tanish Jewelry. It's like though Arabic language is a national language over here, but do many people having Hindi and Malayalam languages as well. So this local business center of the old Dubai, they have reported some 11,000 Indian-owned companies were added in its records in 2022. This is coming with the corporate tax prints. So the bringing along with this 2022 11,000 additional companies to 83,000 companies in the UAE, and this shows that the trade links between the two countries are getting more and more tighter. And with the corporate tax rate, we expand. We see the future coming 4 5 years as more and more companies were going to be follow this trend of adding the Indian companies. So what is the corporate tax in the UAE? Corporate tax is somewhat like levied on the businesses. I'm not comparing it with directly with the income tax. Rather, income tax is a form of direct tax, like having the taxation on the personal income also of the citizens. But here in the UAE, the tax is of corporate tax only on the businesses and the commercial sector. There is no taxation on personal or investment income. So salary is out of the purview of the taxation. Any dividend from the investment is out of the purview of the taxation. Any rental income from the residential houses are keeping out of the UAE taxation. Further, with the taxation, though the rate is quite like single digit rate is having very few countries have the single digit corporate tax rate, and the UAE is one of them. But along with that 9% rate, they have a higher capping of threshold for non-taxability of the income. So there is a 0% tax rate up to net taxable income of AED 3,75,000 per annum. So businesses who are having the turnover of 1 million AED, they are required to register with the federal tax authorities in the UAE, but the tax rate is zero up to their first 3,75,000 of the taxable incomes. So of course that's a huge relief for the businesses. Along with this, up to 2026, UAE has introduced a small business relief. What is this small business relief? What they say that if you have a medium enterprise and small businesses who has a turnover up to 83 million, so in that cases, you need to register with the corporate tax, but you don't have to pay the taxes. So up to from 2023, introduction of the corporate tax in the EA to 2026, small businesses don't have to pay the taxes. So that's a great opportunity for the small businesses. Even though the corporate tax has been interrupted, they still have the time to have the tax holiday period to that extent. Further, though the withholding tax, provisions of withholding tax are there in the UAE corporate tax law, but as of now, there are no rates has been prescribed in the UAE. So the rate is 0% as of now. So withholding tax is not applicable as of now in the UAE, but coming future, of course, the rates will be specified by the ministry, and those will be applicable on the nature of incomes as per the rules framed by the ministry. So this 0% is the withholding tax rate is a silent feature of UAE. Global income is taxable for the UAE resident persons. So the resident person includes natural persons, juridical persons, or other other persons who are formed into the UAE and they have business globally. So their global income is taxable on the same principles of international taxations regulated by the other countries. One feature which in the UAE that has been a little different and what is really new for the taxation laws is forming of the tax group. So suppose there are a group of companies, uh, you can, for the sake of compliance, to make the compliance easier, you can form a tax group, and a parent company in the tax group can make the compliances on behalf of the entire group companies. So this is an international new principle that is been coming into picture of the tax groups. Of course, a lot of complications are there inside when we go to form the tax group, like taking the approvals from the ministry for each of the subsidiaries and parent companies. Then, like SEZs or special economic zones, like kind of concepts in the India, here also there are concepts of qualifying free zone. So a special concession is given to the qualifying free zone. In the qualifying free zone also, I'm more stressing on the qualifying income. So we need to, very specific about qualifying income of qualifying free zone. If that is the income, then special concession is given to qualifying free zone for the tax rates as considered. But this concept is itself a very technical concept, and we take a weeks for understanding what is qualifying free zone, qualifying income that is eligible for this special concession. So, strictly speaking, in UAE, you will find a law of 60 pages hardly, which is a very small for the corporate tax. But that is not the case. After this 60 pages law, the ministerial decisions every today and tomorrow they are coming out with implementing of the corporate tax, and those decisions are very heavy to interpret. Now it becomes too much regulations given by the ministry for regulating these corporate tax laws, and this is what gives a base for the professionals where they can interpret the things, and of course in future, even if the law is short, there are high chances of disputes, and then the professional advisory and consultancy, those all will come into the picture. As I said, in the UAE, it's a diverged economy with MNCs, with diversified peoples, with diversified organizations from all over the globe. The financial year here is an interesting concept. So in India, how do we have a financial year? Is from 1st April to 31st March, or from 1st January to December. And the return filing for assessment year is everything is specified. But in the UAE, every company has its own financial year. They have their own due date of return filings. So there is no such date like 31st December is the last date, or 31st July, or 30th October is the last date. You have the due date depend upon your particular financial year. So there are 3 financial years specified as of now in the UAE for the corporate tax law. That is implemented the UAE corporate tax from 1st of July to June 2023. So if your financial year is from 1st January, from 1st June to 31st of May, then the applicable year, that is the applicability of the city law, is the first day, that is from 1st June 2023 to next 31st May 2024 is the first tax period, and you have to file the return and make the payment of tax within 9 months from the end of your financial year. So if your financial year is ending on 31st May 2024, your first CT return will go on 28th Feb of 2025. That is a 9 months ending from 31st May of 2024. But in the UAE, if you see, many of the companies are following the calendar year. Many of the MNCs are following the calendar year, that is from 1st Jan to 31st of December. So if you are following the calendar year from 1st Jan 2023 to 31st of December 2023, so 1st Jan 2024, so just the new beginning of the year, will be your first tax period. So 12 months period, that is from 1st Jan 2024 to 31st of December 2024 will be your first tax period. And you have to file the return, that is the first UAE corporate tax return, within 9 months from the end of 31st December 2024, that is 30th of September 2025. So a company who is following from 1st May to June, 1st June to May, will have the different registration window and different tax return period and different tax payment dates. While the companies who are following the Jan to 31st December, they have the different uh, date for the return filing and tax payment and registration with the FTA for the corporate tax. And this will go on continuous. So there is no such kind of like framework that has been framed. So, throughout the period, your client's due date will attract to you to comply with the city provisions and filing of the returns, etc. So that is a unique feature in the implementation of the corporate tax in the UAE. Or throughout the year, you will have the due dates for the clients depending upon the period which they follows. Of course, along with this, now UAE is of course a tax. It's a growth making economy from the from 1970 to the first within one generation till 2020. Exponential growth has been happened not only in terms of wealth but also in terms of infrastructure, and that has been happened without a taxation system, like having no corporate tax or something in the picture. The development has happened with the economy. Now, with the current introduction of the corporate taxation system and VAT in 2018, I think sky is the limit for this country for the development in the next 40 years, along with the phenomenal migration that has been happening from all over the globe to the UAE. So there are some reports which says that 4,000 million years across the advanced countries are shifting to UAE as a preferred destination for making the business. Some reports are suggest that even 8,000 super rich persons from the India are shifting to the Dubai and Singapore based on their growth of the country. So a lot of chunk is being shifting to this economy, which gives a lot of opportunities with introduction of the taxation system into the place in the UAE. Some few years back, like 10 years back, I was heard from some of the colleagues that the taxation system is present. So there are no opportunities that has been available in this particular territory. But now with the introduction of VAT and corporate tax, this picture has completely changed. Now this territory is open for the professionals from India to tap the new territory for new businesses. It's completely opportunity for the Indian chartered accountant. But along with this particular opportunity, of course, there are certain challenges when we come to the actuality of the soil of the any country to go for the auditing profession. There are challenges which we need to address upon. And my special focus onto that challenge is that how the opportunities can be tapped with knowing the every system that how we have to go through the auditing profession for this country. Understanding as an auditor certification, like in India, we have ICI regulating every affairs of the chartered accountants from the auditing to everything. Uh, there is a different association in the UAE which manages this auditor certification. So auditor certification is individual expertise in the auditing profession adherent to the industry standards which are specified by the Ministry of UAE. So what are the laws in the UAE for auditors? How any person from the globe who is coming for regulating the practice of audit, regulated by which rules of the UAE? So those rules are applicable for auditors are Federal Law Number 12 of 2014, Cabinet Resolution 21 of 2016, Federal Decree Law Number 14 of 2019. So these all the laws specifies which person who having the qualified degrees and experience a number of years can go into the auditing profession, of course with certain specific procedures. This procedure has been specified here, but with the introduction of the C2, UAE very well know that now this profession is going to have a lot of impact, like entrants into the UAE. They have one cabinet decision in 48 by 2022 on the implementing a regulation of federal law number 12 2014, which is mentioned above, on the regulation of the auditing profession. So that shows that the importance of this profession with the introduction of the CT, how they are regulating the profession and what are the rules for regulating this profession. Whoever so far coming from any of the globe, including India, what are the minimum things they have to complete it to get the license as an auditor into the UAE. So Minister Resolution 43 of 2015, which we saw, concerning the international standards of auditing profession set out in the auditor standards to be met. What these resolutions has the importance? It's important is that when you go for the ministry for registration, they frame the courses based on this. So what are these four key elements of the resolution that requires auditors to implement are international accounting standards. An auditor should have the exposure to the international accounting standards issued by International Accounting Standard Board. Then second comes is behavior and ethics of the profession, that is IES. So that professions give issued by International Ethics Standard Board of Accountants. International Audit Quality Standards, that is ISA, again issued by International Accounting and Standard Boards. So, and IFRS, International Financial Reporting Standards, that has been issued by International Accounting and Standard Board. Those all the things are the minimum or the mandatory things that has been required by the auditor to register as an auditor and practicing as an auditor profession into the UAE territory. Now, the importance of this Cabinet Resolution 43 of 2015, which we see in the coming slides, that if you don't have this, we have to go to certain particular steps, specifically in the IFRS. In the next slides, we will see that. Conditions for registration in the Register of Practical Physical Auditors. So, here, like ICI maintaining our records of the members who can practice, who can be into the practice. Here is a register that is being kept by the ministry. So this register called Physical Auditors Register. And to register as a physical auditor, you must be fully qualified. Now, what is fully qualified? We will see next. That includes even a Bachelor's of Commerce, of course, including Chartered Accountants, then Good Conduct and Behavior Certificate that has not been previously subject to court mandated in the past. So Good Conduct and Behavior Certificate has itself a meaning, what they exactly want in terms of Good Conduct and Behavior Certificate. Bachelor's of Degree, providing the person has at least 15 hours of study in accounting courses. Now here the CP committees, CPRs will play a key part. Like having the CPRs and the certificate from ICI into that respect is been taken equal to this bachelor's degree, having 15 hours study course. Then valid fellowship certificate. Fellowship certificate valid is means they have specified a body which can issue the fellowship certificate. We need that also together. And then the most important is having practical experience in auditing profession for a period not less than 5 years since obtaining the academic qualification. And what is practical experience, that also has been specified conditionally to the next slide. So these 5 conditions are required to practice as an auditor. Of course, then we have to go to certain more procedural things to get this license as an auditor. Conditions in detail to register as a physical audit must be fully qualified. Now, what is fully qualified? At least a bachelor degree you have. Then holding a valid identity card. What is a valid identity card? Emirates ID. Now, getting the Emirates ID, it itself a big procedure. If you see, every 5th shop in the UAE is pro service providers or business setup service providers. And the Emirates ID is itself a huge process, which is mandatory if you want to go for an auditing profession or carrying the audit profession in the UAE. Good Conduct and Behavior Certificate. Of course, we are getting the Ethical Conduct Certificate from the ICI, but here Good Conduct and Behavior Certificate, they mint it from Dubai Police. So there is a website which mentions the requirements that we need to give it to police department, and thereafter they will carry certain procedures and they will give us Good Conduct and Behavior Certificate. So this is essential for obtaining Good Conduct and Behavior Certificates, which again require Emirates ID is the basic requirement, with some 200 plus 80/20 payment of the fees, and specifying the request why we require the Good Conduct and Behavior Certificate. When 15 hours study credit means any one of the following: transcript of the bachelor's degree mark sheet. Transcript means changing it to the national language of the UAE of every year. Or CPR certificate by ICI has also been taken as study credit certificate. Then if the both are not there, suppose somebody else is there, like from other country, then certificate of 15 hours training from one Bloom Institute is also taken granted for completing this particular condition. So we have seen the conditions, and then fellowship certificate. Now this fellowship certificate is a big process itself. To have the fellowship certificate, what we want, it should be given by the Emirates Association for Accountants and Auditors. So like ICI is a body which governing um, in India auditing profession. Similarly, ministry is governing in the UAE, directly Ministry of Economics governing the auditing profession, and they want the fellowship certificate awarded by Emirates Association for Accountants and Auditors. Now, how we will get this fellowship certificate? Getting Emirates ID bachelor degree, CPR's credit, and 15 hours CP certificate. These all requirements can be managed somehow. But then again, having the fellowship certificate is an additional step what we as a chartered accountant wants to go ahead and take. Having practical experience, that is also one of the important thing. Practical experience in the audit for a period not less than 5 years since obtaining the academic qualification. Now, what is the practical experience? When they say practical experience, they want practical experience in their territory. That will be clarified from the next slide. And the 5 years are too much. So there are some conditions. What is the exactly meaning of this practical experience? So what is the detailed meaning of 5 years of practical experience? Because conducting it from now to next 5 years will be a big challenge for any person who is coming into the new territory to carry on the audit profession. So this detailed meaning of 5 years of practical experience is 5 years reduced to 1 year if a person's experience outside the UAE exceeds 10 years. So suppose I'm a person who is chartered accountant in India carrying the qualification and practice since last 12 years. In this case, my experience will be reduced from 5 years practical experience to 1 year practical experience. Suppose if it is not 10, it is from 5 to 10 years, then you need to have 2 years experience in the UAE. If outside the UAE, you have 5 to 10 years experience. And if it is less than 5, then you have 3 years experience outside the UAE. So even if 1 year's experience, if suppose somebody is having more than 10 years of experience in the audit profession in the India, carrying the certificate of practice, but still 1 year experience to have that certificate of experience for 1 year into the territory of India has been attracting a challenge how to get that 1 year's experience inside the particular UAE territory. Then we said fellowship certificate. Barring apart from this, all the points which we say Emirates ID or good standing certificate from Dubai Police, the degree which we said. But getting the fellowship certificate is the next step for any person who is a chartered accountant carrying more than 10 years of practice in India and then coming to the UAE for getting the practice. This fellowship certificate is something new which we have to go through. So to get the fellowship certificate from this Emirati Association for Accountants and Auditors, which is a regulating body over here, to give the fellowship certificate, which is the precondition of the ministry to grant the audit license. We have to get the membership of the EA, and that for that we need to require to submit some documents. Now the E4A Institute, which says that to get the membership, you need to require to go to some exams, and that exams are to be conducted from the ACCA. Then after doing that exams, you have to submit that exam results to Emirati Association for Accountants and Auditors, that is E4A, and thereafter they will award you the fellowship certificate. So that means not you are automatically eligible to get into enroll yourself into the auditor or carrying the audit profession in the UAE. After this, all the steps you need to go to certain exams and to get the fellowship of some new institute, that is Emirates for Association for Accountants and Auditor E4A. And what are that exams? We will see that exams. Getting the membership of AE again, E4A, you need to give an application form duly filled along with the following document, that is bachelor's degree attested in the UAE, transcript mark sheet of bachelor degree, copy of the, that does not mean we don't have any importance of the CA qualification degree here. That will come to the next when we go to the ministry for getting the audit license. Here we are just discussing about the fellowship certificate from one institute. So that is the only requirement. That's why they're stressing on the bachelor's degree or transcript mark sheet of the bachelor degree. Then of course, copy of the Emirates ID. Everywhere you go, copy of the Emirates ID is mandatory here. a personal photo, and then membership fees of AED 315 somewhere nearby. Then submit the required documents eligible for the exams. So that exams of the minimum prescribed guidelines that has been conducted through ACCA by E4A. So what are the documents that needs to be given to this conducting this appearing for this exam? Is a passport copy, your Emirates ID again, then again your bachelor degree accounting transcripted form in the national language, then fellow certificate from ICI. Here the rule comes, to get associated with the EA and to get enrolled for the examination, you need to have the fellowship certificate from ICI. So we need to obtain the fellowship certificate from ICI. Then transcript CA exam mark sheet. And then letter of good standing, that is from ICI. Again, in the e-services tab, we have this option for getting the good standing certificate from ICI. And then affiliate membership of EA, which we see in the previous tab. Along with this, all the documents, we have to submit these documents to the Emirates Accounts and Auditors Association, and they will then give the link to register for the exams on the ACCA portal. So it is not like automatic that you will go to the ACCA for that exams. That will be, surpassing one step. You need to first give the documents, get the membership of EAA, and then after submitting this all document, they will send you a link for the registration with the ACCA for appearing for the exams, and then you have to appear for the exams and give the results to the E4A Institute, and then they will give you fellowship program. So the results which we are supposed to receive from the ACCA, what are those exams? Those exams are conducted by the ACCA. I think quarterly they are conducting the exams, and this examinations includes the following papers. In these exams, you have to score at least 60% in each of the subject. So what are the subjects in the exam? The subjects are the same that has been described by the ministry via the resolution, what minimum requirement you have required to have for carrying the audit profession. That is accounting standard examinations, that is the IAS and IFRS examination, then auditing standard examination, and then legislative and tax examination, that is UAE laws knowledge you should have. Now, point to be noted here is that you need to give 3 exams, but these 3 exams are not for some of the chartered accountants, like holding the degrees from some of the countries, which are those professional certificates that exempts 2 papers. So means you need to just give 1 paper if you have degree from these professional institutes. And unfortunately, ICI is not recognized into this. So a person who is from India, he has to go for all the 3 examinations. So what are the examinations that someone has to have so he can appear only for 1 paper of legislative and tax examination is AICPA, that is Association of International Certified Professional Accountants, ICAW, ACCA, CPA Australia, CPA Canada, and Saudi Arabian Chartered Accountant Professional Accountants. Those are the institutes of which degree, like CA in India, we are having. If they have these degrees, they don't have to give 3 exams of ACCA. They just have to give 1 exam of ACCA, that is legislative and tax examination, that is for the UAE laws. So for us from India, that we are applying for this fellowship certificate from E4A Institute, we need to go through ACCA for all the 3 exams. That's unfortunate part here. Then after this, all things like having the all documents and then the fellowship certificate from the E4A Institute, we have to go for ministry to get our name recorded as an auditor in the physical auditors register, and that again requires certain documents. Then what is the documents? Again, Emirates ID. Everything starts with your Emirates ID. So first challenging task here in this country is to get your Emirates ID, that is your residence visa here, and then Emirates ID and visa copy. Then your 12th mark sheet, certificate attested and transcripted both. Then your bachelor degree, that is your 3 years course and like BCom course, and transcript copy of the bachelor degree. Then both things required to be attached. And along with that, this particular procedure has to go through a consulate in India, that is a UAE embassy via VFS channel. There is a website called VFS attestation. You should get the authenticity letter from the of university degree. That is, if you are going through BCom from Mumbai University, then this Mumbai University's authenticity letter, you have to get it from VFS of UAE embassy from India, and then letter from university that university was affiliated during the period of study. this data flow, authenticity data flow, that is third-party service provider, little fast as compared to consulate. These particular requirements are to be given to the ministry on their website for getting your name registered for the physical auditors. And with this, all the documents, if the documents are ready with you, like fellowship program, 12th, 15th, CA degree, Emirates ID, passport copy, visa copy, all things, then you have to apply for the auditor certificate on the Ministry of Economy website. You need to register on the first Ministry of Economy website. So this is the website for your information. Register on that. Then you have to add your organization profile, submit the request for auditor license, and then Ministry of Economy will check and then give you auditor certificate. But that is also again a process. Okay, going on to this website, registering first yourself, then register organization profile. It is not like you directly given your name. You first register organization profile, and then after the organization list has been approved, you can go next by submitting this every details in the organization profile. So what are the steps? 6 steps in the ministry. One is like having all the requirements ready, getting fellowship program, and then coming to the ministry for getting yourself enrolled as a auditor's license in the e-services. So once we got this all information, 30% task will complete on request submission. Request submission is your basic details with educational qualification, with all the certificates we in the previous slide we disclosed. Then fellowship certificate from Emirates Association of Accountants and Auditors. Then work experience certificate of 5 years. Now, what is 5 years? We already discussed. That is 1 year in case of person having more than 10 years of experience. And then the required personal document is the things which we require to submit in the first stage. Along with that, we need to make the payment of 100 AED plus their charges, that is 106 AED. And then these documents will be considered by auditors department review. So there is a department which check every details from this beginning of this slides, which we saw that the practicality involve all the documents. All the documents shall be reviewed, and the information may be provided for any information or additional documents to you. Then after approving by the auditors department, you have to go next stage again for one payment for getting the license. That is a subscription payment, and the payment will be 4,500 AED plus charges. So it will be somewhere nearby 4,532 AED. And here you will get the practitioner certificate, but it will be inactive. It will be without firm name. So your name will be registered in the physical of auditors register as a person. Then you have to do filing work. That is the stage number 5. What is filing work? Like place of work and place of address, and your name should be fed into the organization profile which we have created there. Professional indemnity insurance is must. Without that, your filing work will not be completed. So first step is like whenever you are doing this, all the things, here the insurance company which is providing the professional indemnity insurance in this country, we have to go for the professional indemnity insurance and then HR letter. With this filing work can be completed, and then this filing work will be again checked by the work information review, and then after approval, your name will be taken into the e-register maintained by the Minister of Economy of UAE, and then you will be eligible to act as an auditor of this territory anywhere into the UAE, including Dubai, Abu Dhabi, Sharjah, anywhere. So penalties for this particular region are very high as compared to any other countries. Very harsh penalties. So compliance has to be very perfect. The ministerial decision 633 of 2016 is just like before corporate tax. Some provisions they have come out. Auditors, what are the details of the crime and the penalties? Auditor's name is not accompanied by a registration number. So if you mention your name, you don't mention your registration number in any of the printed material, correspondence or certification and reports, the penalty will be AED 20,000. If your certificate you did not display at a prominent location in your office, then the penalty will be AED 20,000. Auditor's name is not used as a basic element in the address of the firm, then penalty will be AED 80,000. In fact, if you not respond to the ministry's queries while you are auditing, then the penalty will be 60,000. If an auditor fails to keep the records for 5 years, the penalty will be 50,000 AED. So converting it into the INR, it comes to a big penalty. So this profession is taken very seriously into the UAE. So we see corporate tax coming, VAT coming, we approaching to the new territory for acting as a tax consultant or acting as an auditor, but we need to understand all the procedures that is being required into the new territory to act as an auditor. So what are those provisions that needs to understand first before moving to this particular territory? Of course, with the opportunities into this territory, it is always inevitable to go for all this procedure, but many of our colleagues are missing this particular part, and to gather this all the information has become very tedious task. So what I have did is I have compiled this all the information for our professional members as a neighboring country UAE. If they are going into the taxation era, then what are we need to be prepared for to getting into this new territory. This is what the presentation was for as an Indian CA for corporate tax trends into the neighboring country of UAE along with the global corporate tax uh, region. So I'm Satish Jyotri representing JDSD and Company Chartered Accountants and Tax International LLC in the Dubai. I know there might be many queries people will be having in their minds because the presentation is too speedy, including so much of the content. Might be somebody is having the questions into their mind. They can just scan the QR code and an inquiry page will come over there. You can send me your queries or you can send it in the chat box right now, which I'm happy to take up. Hand over to you, Dhaval. This is all for the professional colleagues from my side.
Thank you, sir. Sir, there is one question from our participants. The question is, when you say the first tax period, so the return will be filed on tax period like when the return will be filed for the tax period like 1st Jan 24 to 31st December 24.
1st Jan 24 to 31st December 24 is the majority of the companies are governed by this particular calendar year. So I can say 60% of the UAE companies are following this calendar year, and their first applicable period is 9 months from the end of the financial year. That is 31st December 2024, you said the ending of the financial year. So 9 months end on September 2025. So your first return will go by 30th of September 2025. But you need to understand here, 9 months from the end of financial year is the date for filing the return as well as making the tax payment. And for that, you need to get registered with the Federal Tax Authority, that is FTA in the UAE. So you have to ensure well in advance that your registration shall be done and thereafter payment and return before 30th of September 2025. So this entire process has to be done along with this.
Okay. Thank you, sir. Thank you, sir, for your nice presentation, and thank you for your enlightening and awareing us about for the UAE taxation and how the Indian CAs can practice and make the attestation work in UAE. Thank you for your valuable time, sir. So with
my pleasure, Dhaval.
Yeah. So with this, we are concluding the sessions. Thank you everyone for your valuable time and participation in the CP committee's seminar, sir. Thank you everyone.